The setup going into the number is one of the most binary I've seen in months. The Iran war, the oil spike, the Fed repricing. Friday is the number. Let me map it out clearly. Market reaction is measured. Dollar holds current levels. One more thing on timing. This report drops Friday, April 3rd. EUR/USD just broke below a key support level it had held for months. When a major pair loses that line on the last day of the quarter, it's not noise, it's a signal. And Friday, the jobs report drops. Here's exactly what I'm watching and what each scenario means for your trades. Quick reminder, nothing in this video is financial advice. Always do your own research. 3 things happened today that matter. First, EUR/USD broke. Below a key support level it had held through months of geopolitical volatility. The pair is now searching for the next floor. Second, oil spiked sharply intraday. The strait is still closed. Currency pairs are repricing around energy vulnerability. And Europe and Japan are on the wrong side of that trade. Third, NFP drops Friday. February came in at minus 92,000. The consensus for March is around plus 57,000. That would be a recovery, but a modest one, not the clean rebound the market wants. The setup going into the number is one of the most binary I've seen in months. Move 1. EUR/USD breaks key support. Why this is different. EUR/USD held above key support through all the volatility of the past 2 months. The Iran war, the oil spike, the Fed repricing. It held through all of it. Today, it didn't. Here's what happened structurally. Europe imports most of its oil. When Brent is this elevated, Europe's energy bill explodes. That's inflationary, but it's also a massive terms of trade shock. Money flows out of Europe to pay for energy. That creates real selling pressure on the euro that doesn't go away until oil drops. Meanwhile, the ECB is stuck. Raise rates to fight oil-driven inflation, and you choke an already fragile economy. Hold and inflation stays elevated. There's no clean exit. The market is reading that as euro negative, and today's price action confirmed it. For reversal, EUR/USD needs to reclaim the broken support level on a daily close. Until that happens, this is a bearish structure, and rallies are selling opportunities. Move 2. The NFP setup. Every scenario mapped Friday is the number. Let me map it out clearly. Scenario A, above 150,000, dollar bull case. Strong labor market. Fed stays on hold comfortably. Rate cuts pushed further out. DXY pushes higher. EUR/USD accelerates lower. GBP/USD breaks below near-term support. USD/JPY tests higher resistance. Scenario B, 57,000 to 150,000, inline or modest rebound from February's minus 92,000. Market reaction is measured. Dollar holds current levels. Watch average hourly earnings. If wages are rising, the inflation story stays alive even with moderate job growth. Scenario C, below 30,000 or another negative print. This is where it gets dangerous for the dollar. Back-to-back weak jobs reports forces the market to start pricing Fed cuts regardless of inflation. EUR/USD could spike back sharply and erase today's breakdown. GBP/USD bounces hard. One more thing on timing. This report drops Friday, April 3rd, which is Good Friday. U.S. stock markets are closed. Forex trades through, but liquidity will be thinner than a typical NFP Friday. Moves can be amplified. A 100 pip move in normal conditions can become 150 to 180 pips in thin holiday trading. The full equity market reaction comes Monday, April 6th. Move 3. The energy vulnerability trade. The single biggest theme right now in Forex isn't the Fed. It's oil. Elevated Brent creates clear winners and losers across currency pairs. Losers, EUR, energy importer. JPY, energy importer. BOJ can't raise rates aggressively. Winners, CAD, Canada is an oil producer, loonie outperforming. A UD, sheltered from geopolitics, commodity exposure. RBA, maintaining hawkish tilt. CHF, safe haven flows. Switzerland runs current account surpluses. This is the trade the market is running right now. EUR/CAD and AUD/JPY are the cleanest expressions of this oil divergence theme. EUR/CAD has been falling as oil rallies. That trade stays intact as long as the strait is closed. AUD/JPY is being driven by the BOJ's inability to hike versus the RBA's hawkish stance. Both are cleaner than trading EUR/USD or GBP/USD, which have mere noise around the NFP release. DXY, support 99.00, holds going into NFP. Bull target, 101 to 102, strong job sprint. Bear target, 97.00. EUR/USD, broken support zone, 1.1500 to 1.1530, now acting as support. Next support, 1.1410. Resistance, 1.1640. GBP/USD. Support, 1.3160. Resistance, 1.3250 to 1.32800 band. Now 1.34800 to 1.35100 band. Break of 1.3100 opens path toward 1.2865 medium term USD/JPY. Support, 157.500. Buy dip structure intact above here. Resistance, 160.00 BOJ. Structurally unable to hike under oil pressure. Yen stays weak. Today's EUR/USD break tells you the market has shifted from wait and see to actively pricing European structural weakness. Elevated oil is the driver. The ECB's policy paralysis is the catalyst. Friday's NFP is the next test. Consensus is around plus 57,000, a modest recovery from February's minus 92,000. If jobs hold up, the dollar rally has legs into Q2. If we get another miss, everything I just said about euro to US dollar gets complicated. Fast. Two things I'm watching at the open Friday: the euro to US dollar reaction to pre-NFP positioning, and crude oil headlines around the Iran April 6th deadline. If both move in the same direction, that's a trade. What's your read on NFP? Does March bounce back from February's minus 92,000, or do we get another miss? Let me know below. I'll be back Friday with a live reaction analysis. This content is for informational purposes only. It is not financial advice.